Hello everyone, it's Sunday, February 6, 2022. So this video is controversial, is very important. I actually had a video over in April, I think April 9th, explaining that the stock market is an auction. It's 8 or 9 months ago, so if you go back to it, you could see that nothing's changed. But if 2021 and early start of 2022 has shown us anything, it proves the fact that the stock market is a live auction. Now, I started trading when I was 14 in 1994. At that time, no idea that it was an auction. Everything was fine. I thought if a company did well, automatically the stock goes up. If the company did bad, automatically the stock goes down. And then when I was around 16, 17, I started going to my broker, which when I started trading is with JB Oxford. It was over the phone. They were located in the city. But my sophomore year of high school, on Fridays, I took a whole bunch of classes so that my sophomore, well, not my sophomore, where's that, the third? So the third year of high school, I can go on Fridays early to my broker and hang out with him and talk to him. And then my senior year of high school, I was getting out like at 11 or 12 o'clock on some days of the week because I had finished all my credits so that I can go more in my senior year. But I started going to my broker when I was a junior in high school. I was 16, 17. And at that time, he didn't know I was so young, so he thought it was so cool that I was showing up. I was young and I knew so much about stocks. That's another thing. But once I met him, I learned more about the way the market works. Because he was so young, he would introduce me and take me to a whole bunch of different people. So as time wore on, by the time I was 17, 18, I pretty much knew the way the market works. I met actual market makers also that told me about the auction. At that time, like I said, I didn't want to believe it. I started trading in 1994, and by the time 2000 came and the stock market crashed is when I realized what they were telling me is correct, that the stock market is a live auction. Now, the reason why this is going to be pretty controversial, because most of you new traders are brand new, came post-pandemic, so after the crash, free trading, and a lot of things moving up because retail is bonding together. So a lot of you came after 2020, like maybe April or May after the crash, and even more people came after AMC GameStop. Okay, a lot of you are jumping into plays because it's short. And I hate to tell you, when a company is short and you guys are new, most of the people that have been trading for a long, long time are shorting a stock for a reason. Now, back in the days, like 2019, or if you go back even longer than 2019, if you go back before 2019, companies weren't short over like 10, 15%. If a company was short 10 or 15%, it meant something was terribly wrong. So these days, you can have a company short 80%, 90%, or in AMC GameStop's case, you had over 100% or near 100% because every share that was in the float was accounted for, and there was options betting that it was going to go down. So it was actually short over 100%. But you, as new retail, if a company is short that much, especially back in the day, it is short for a reason. The only stock that I've seen heavily shorted since 2021, only one that's heavily short, like heavy short is over 30%, is BBIG. They are profitable. They make money. Now, given maybe it was a heavy short because it was $25, $30. Although $25, $30 is not too bad. To me, it's worth low 20s. I think it's 18 right now because the market has just hit. But basically, I'm saying if a stock is heavy short, is usually a bad sign, not a good sign. For you guys right now, it's a great sign. You guys combine together, try to go through social media, and that'll be my fourth video, my last video before I start heading over to Connecticut. You guys go together, combine together, tell other people on social media, go on Reddit, Twitter, stock twits, try to boost up a stock that is heavy short because you guys just want to make it go up. Now I get it. If a stock is heavy short, the chance of it going up high is a lot easier because you're forcing someone short to buy. And if you're buying calls and exercising in the money calls, you're forcing it to go up even quicker. So I understand that, but not every company can be a short squeeze because there's so many companies. And right now, with the way AMC, GameStop is trading, a lot of people are fear to jump in a short. Now, what a lot of people don't understand is with an auction, and this is very easy, it's supply and demand. If a company has no money and they sell shares, that increases supply. So demand is the same, meaning people that want to buy the stock aren't buying the stock. And supply, meaning new shares come in, the stock price is going to go down. If a company has cash and they make a lot of money and they go into the market and buy, they're taking away supply and increasing demand because they're coming in with the wallets. They're coming in with cash. All right, so that's very important. Another thing that's important that almost no one knows about, is that the people that are diamond handing are no effect on the stock price. If you're trading the stock today, you matter to today. If you traded the stock yesterday, last week, last month, you have no say in the current stock price. All those people on Facebook that already own Facebook had no say in the stock crashing $60, $70, and now it's like 240 or 230 something from 300. All you guys that held it, diamond handing it, had no effect on current stock price. The thing is, when you diamond hand the stock, you make it easier to go up and down. Because think of it this way. If there's 100 shares of a stock, 100 shares, and 90 people are diamond handing, and only 10 are in circulation, those 10 control what the stock price is. Not the 90 that are diamond handing, but the 90 that are diamond handing are making it easier to go up because there's only 10 shares left. But the new people coming into trade are the ones that decide your fate. The 10 shares that are trading decide the fate of the 90% of stock that's held out there. Now, a lot of people don't understand that, and I know I'm going to get hate because I actually got a warning of a ban on Reddit, which I'm not very happy about. I'll go over that also in video 4. Is the short squeeze cannot happen. The short squeeze, the mother of all short squeezes, will happen when a company is like at least 50% short or more. That means half of the shares outstanding are short, so it's easy to make it go up. If 10, 20, 25% are short, it's not easy for it to go through. It can, but now there needs to be more of a concentration of it. If all you people holding AMC or GameStop are diamond handing, the new people are the ones making it go up or making it go down. If the new people don't have faith in the stock, if the new people see earnings bad, if the new people see all insiders selling, how is that going to make this go through the roof? Now the new people buying the shares are less, they have more fear, less focus, and do not believe that it's going to go through the roof. And how are you going to believe it's going to go through the roof if insiders are dumping or they're printing new shares? If they're printing new shares, that means supply has gone up. That means it's harder for the stock to go up. How do you want to own the float? How can you be happy that Wanda, Silver Lake, Fidelity dumped a lot of shares of your company. If they dumped a lot of shares, they were diamond handing it, making it easy to go up. If they, diamond hands, dumped into the float, making supply very high, and the float is owned by another ape that can't eat, can't pay rent, what are the chances of them selling before diamond hands that has money? So we're going to go on to that from that. Okay, the reason why Facebook fell so much, and it's very unfortunate, majority of Facebook is held by big money. So its movement is decided by the float that's out there trading. Okay, at from about 405 or 410, it dropped heavy. It dropped heavy not because of the diamond hands, because someone came in and said, you know what, I want to pay $250 for Facebook. And they thought that the other people watching the level 2, the auctions, said, you know what, $250 sounds good. So they're the ones, believe it or not, that decided what the stock price is. Thursday, Amazon had a bad report. You know, on headlines through the PR, it looks good. I spent about 90 minutes reading the report 2 times, the whole report 2 times, and taking a look at the financials. And they have a lot of iffy stuff, which I don't blame them. But the earnings report was not good. But at 402, 403, Amazon stock was taking off. Do you think that the people trading at 402, 403 went to SEC website and looked at the actual report and financials of Amazon? No, they did not. And I don't even know if analysts or TV heads, even at night, looked at it. I did. I want to see if I was missing something here. Because how is the stock going up so much when they miss sales? That's another thing. If you miss sales, Amazon missed sales. How did earnings bottom line beat by so much? Those are things, signals that if you have experience, you have to see. Okay, you would think that if a company beats sales by a lot, they would make more money. But if a company missed sales and beat earnings by a lot, that should tell you something is going on. Let me look at this. Let me see what is going on. But, you know, Amazon stock went through the roof. So in 3 or 4 minutes, remember, the diamond hands don't control the stock price. The diamond hands make it easier for the stock to go up or down. So if market makers are big money, already has Amazon, and they want to make Amazon go up, they start bidding right away. If other retail believes it's worth that much, that's what it's worth. Because remember, the stock market is the auction. I know this is going to be controversial because a lot of people are playing short squeeze stocks only. I've always said, now I didn't say it to the public, I may even said it lately on Reddit, because I too want to make money on these trades. But I at least knew that these companies were garbage. ATER, BBIG, TMC, IRNT. These companies are all garbage with no sales. Of course they're short big. Of course they're short. Why would you want to go long? PROG, CEI. The only reason you're going long is in hopes that another sucker is going to take it off your hands. And that only worked for so long until a lot of people get burned. And then when a lot of people get burned, they're afraid to buy again. And can you blame them? There's no sales, no profits. So this is very important about the market being an auction.